What is up, Bitcoiners? I hope you're fired up from this week's price action because I know I am. Welcome to Channel 256 News, your daily shot of Bitcoin and mining news, where we break down key trends, mining metrics, and the best damn stories in Bitcoin, all in less than 10 minutes. Because, hey, you've got better things to do, right? I'm your host, Trevor Bello, here to keep you in the loop and maybe make you laugh before you start your day. So let's dive in. Today's mining metrics. It is Wednesday, November 13th, 2024. At the time of recording, Bitcoin is doing its thing at $88,140 with a fresh all-time high of $89,990 on November 12th. We have consistently been hitting new all-time highs every single day since Donald Trump got elected president. That's right. The orange man for the orange coin is causing quite the stir. Will we see 100K by Thanksgiving? I'm not sure, but it would be cool as hell if we did. Either way, I'm not bothered because the fundamentals haven't changed one bit. Our block height is 870,068 with the total network hash rate at a hefty 723.8 exahash. And our last difficulty adjustment was an upward adjustment of about 6.2%. And if you're wondering about the next difficulty adjustment, it's in 844 blocks slated for November 18th with a teeny 0.3% upwards adjustment. Our top story of the day. So what's got everybody buzzing? The Bitcoin hash ribbons indicator is back with another feel-good moment for miners. This nifty little metric tracking the 30-day and 60-day moving averages of Bitcoin's hash rate shows miners are no longer just surviving, they're thriving. When the 30-day moving average crosses above the 60-day, it's like saying, hey, the lettuce hands are out and the diamond hands are in. Usually this is a solid sign that price might go up, and who doesn't like that? With hash rate at an all-time high, Bitcoin's security and resilience are basically throwing shade at market volatility. This crossover suggests that miners aren't just in for a quick buck. They're here for the long haul. If history's any guide, this could mean good things for prices. All right, a quick heads up for all serious miners out there. This Friday, November 15th at 10 a.m. Central, the Mastermind Club's doing a deep dive on how to build and develop Bitcoin mining sites and data centers. Sounds pretty fancy, right? If you guys want to get in on it, hit up the link in the description for more information. Our next story, El Salvador and Bhutan Bitcoin stashes. In today's game of which country has the bigger Bitcoin stash, we've got El Salvador and the unexpected challenger Bhutan. Thanks to Bitcoin's recent price rocket, El Salvador's holdings are now over 500 million, while Bhutan, yes, tiny little Bhutan, has 1.1 billion in Bitcoin. El Salvador's stack of 5,932 Bitcoin built up through dollar cost averaging represents about 1.5% of its GDP. Bhutan, meanwhile, holds 12,574 Bitcoin, more than a third of its GDP. Talk about putting all your eggs in one digital basket. El Salvador's strategy, led by President Nayib Bukele, has had its critics, especially at the IMF, but they're optimistic enough to buy back $2.5 billion in debt. Meanwhile, Bhutan's been quietly mining away with hydroelectric power and has climbed the ranks to be one of the top in the nation state, or top nation state Bitcoin holders. Both nations seem pretty happy with their choices, especially with Bitcoin priced at 87,000. Before our final story, here's a little teaser from Greenwich Generation about their latest containerized mining solution, the PodX, because let's be real, nothing says cutting edge like stacking miners in a fancy shipping container. Smells like digital money.
We're self-miners ourselves, and we understand a lot of the problems that a common miner out there or a common company that runs air-cooled units might experience. And we've helped a lot of other sites that use these air-cooled solutions, and we understand what you go through. Like, we understand the higher research issues that might come with some of these solutions. Like, it's really what drove us to want to try and solve that into one solution, which is what we ended up doing.
And there you have it, a fancy, brand new a brand new containerized solution from Greenwich. If you guys want to find out more about the PodX, hit up podx.bitcoinminingworld.com or just click the link in our description. All right, guys, don't worry. I'm going to get you out of here real fast. So our final story, BitFuFu, a NASDAQ-listed Bitcoin mining company with ties to Wall Street, just snagged a $100 million credit facility from Antpool Technologies. Why, you ask? To make it through this Bitcoin bull run with a smile. This loan has a nice 6.5% interest rate and is backed by BitFuFu's Bitcoin holdings at a 70% loan-to-value ratio. Antpool's holding the collateral just in case. Following the announcement, BitFuFu's stock jumped 18% to 5.73 in line with Bitcoin's price surge and a mini rally across digital assets. BitFuFu's also doing some belt tightening to fight rising production costs, which have shot up by 170% over the past year and taken 75% bite out of profits. They're pivoting to a let's own more of our own stuff strategy, recently picking up a $80 million or an 80 megawatt mining facility in Ethiopia to access cheaper East African power. With 600 megawatt hosting capacity and 13% now owned outright, they're also planning some tech upgrades to squeeze out more efficiency. Despite the growing pains, BitFuFu saw a 70% revenue bump to $129 million in Q2, though profits dipped thanks to rising costs and lower miner revenue across the industry. All right, guys, as promised, short and sweet and to the point. That wraps up today's segment of Channel 256 News. Thanks for watching, and be sure to tune in tomorrow for Bitcoin and mining, for more Bitcoin and mining insights. Hit subscribe, stay informed, and keep riding that Bitcoin wave.